Hi everyone, and thank you for tuning in. In this video, I'm going to highlight my top tech stocks to buy in October. I know 2022 has been a difficult year for technology stock investors, but that's also created a couple of opportunities at least that you can buy at affordable prices because of these major drawdowns. So let's get right into it. My first tech stock to buy is Alphabet. Alphabet is home to arguably the most dominant business in the world in Google search. It has an over 80% market share in worldwide search engine results. That's a massive lead and an advantage because so many of our purchase decisions start with an internet search, and so businesses are going to want to spend the money to get ranking above in those search results, and that's where Alphabet benefits. And despite its already large scale, revenue was over 250 billion in 2021, it has room to expand because it participates in a massive market. The advertising industry is approaching $800 billion globally, and so Alphabet can continue growing over the years despite the fact that it's already so big. Finally, it's trading at the cheapest valuation in the last 10 years when measured by the price to earnings and price to free cash flow, two of the more important valuation metrics that exist for financial analysts. It's trading at a price to earnings of 18.6 and a price to free cash flow of 20.89, and you can see in the chart here that's just about the cheapest it's been according to the metrics going all the way back in the last decade. So for that reason, Alphabet is one of my favorite tech stocks to buy in October. Okay, my second favorite tech stock to buy in October is Chegg. Chegg is an education technology company that primarily serves college students worldwide. It has a subscription business model with 84 million pieces of proprietary content. These are usually step-by-step solutions to concepts that students are having difficulty with in their curriculum. So when students go online and they search this concept or topic in the search engine, if Chegg has what they're looking for, it pops up, and a few clicks later, the student has what they're looking for and Chegg has a new subscriber. That's also a benefit for Chegg because it's a low-cost acquisition tool. Students go looking for the content, and Chegg already has this content, and so they attract customers at low cost. I mentioned earlier that they primarily serve college students. Well, college enrollment decreased after the onset of the pandemic because getting a college education is difficult enough as it is. It's even more difficult during a pandemic with going back and forth between online and in person and wearing a mask, not wearing a mask, all of the extra difficulties that came along with going to college in a pandemic. But thankfully, enrollment is rebounding from those setbacks. The summer semester management highlighted that the summer enrollment was excellent and that the trends for the fall semester that they've seen look good. So when the company next reports and over the next several quarters, it's likely to experience the continued rebound in student enrollment, which is good news for Chegg because those are extra students that could potentially sign up to Chegg's services. Okay, and then finally, enrollment typically increases during a recession. So the world is teetering on the brink of an economic recession because of the after effects of the coronavirus pandemic. Inflation is soaring. Central banks around the world are raising interest rates to combat rising inflation, which is threatening to start an economic recession if it already hasn't done so. But the good news for Chegg investors is that during recessions, more students go into college, which makes sense, right? If you're in that age group where you just graduated high school and you're thinking about going to college or going out to get a job, if it's hard to get a job, then it makes going to college that much more lucrative because you're not finding good employment opportunities. And then those individuals that are working, they might not be getting as many hours during the week as they would like to, and so for that the remainder of their time during the week, they may take an extra class or two on campus, and that increases the need for Chegg services. So that's a positive for Chegg in case of a recession. And Chegg, like Alphabet, is trading at near its cheapest valuation. A price to free cash flow of 18.67 is the lowest that it's been going all the way back before 2018. And so with both of these stocks, you're getting it at a cheap valuation. And that helps my case for making it my favorite tech stock to buy. So there you have it, my two favorite tech stocks to buy in October, Alphabet and Chegg. Let me know what you think of these stocks in the comment down below. Would you have thought of other stocks that I didn't mention? Let me know what stocks you would have thought of. But thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.